Hello and welcome to another Deep Value video. Today taking an in-depth look at Zscaler Incorporated, ticker symbol ZS. We'll dive into financial metrics, assess the company's growth, and ultimately try to find its fair buy price. Zscaler Incorporated is an American cloud security company based in San Jose, California. The company offers cloud-based services to protect enterprise networks and data. The stock is priced at $206.6 with a market cap of 41.7 billion. Now let's dive into some key valuation metrics. The price to earnings ratio stands at minus 550 and the price to cash flow ratio is 40.1. The median P over the past 10 years was minus 66. Over the past 5 years, the company's revenue has grown by 402% and its bottom line has increased by 50%. In terms of earnings per share, there has been a growth of 56% towards profitability, and notably, the number of common shares outstanding is 150 million, with a plus 15.7% change over a period. Now, let's assess the company's liquidity and solvency. The interest coverage ratio is minus 9.3, which of course is not really good, but if they manage to reach profitability next year in fiscal year 2025, then this won't be a problem anymore. The quick ratio measure of the company short liquidity is 1.09, which is good. And additionally, the long-term debt to equity ratio is 0.89, and the total debt to equity ratio is 0.89 as well. So they have a moderate debt load. Shifting to cash flow segment, cash from operations stands at 778 million, reflecting a growth of 882%. Cash from investing activities is minus 680 million with a minus 44.2% change, while financing activities are at 64 million, showing a minus 93.7% change over the same period. CapEx has increased by 234.8%, and free cash flow has grown by 198.9% to 580 million. Moving forward, let's look at the return metrics, see how the company is utilizing its resources. The return on equity is minus 5.5%, the return on investment is minus 7.7%, the return on assets is minus 1.4%, and the return on invested capital is minus 8.9%. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 9%, a revenue growth rate of 15% for 10 years, and a probability growth rate of 2%, we get a fair value of $89.1. Secondly, using a multiple valuation of 20 times forward earnings, 20 times trailing 12 months operating cash flow, and 25 times free cash flow, we get a fair value of $86.4. Finally, the analyzed target price is $222.7, and putting it all together, we get an intrinsic value of $132.7. Using a 15% margin of safety, you get an acceptable buy price of $112.8, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I'll rate Zscaler as a sell. Now, for those of you that love these, I don't know, hyper growth stocks that aren't profitable, then yeah, maybe you like it. But from a value investor standpoint, this is not really a great stock. I mean, even in my DCF, I used 15% growth for 10 years, a decrease in half of the capex margin. So from I think it was like 9% of revenue to like or 7% to like 3 or 4%, and the growth of their operating cash flow margin to 30%. We even with those extremely good assumptions, they are basically a buy at less than half of the current price. So this is most definitely not a value play right here. This is only a speculative play. If you like speculative plays, if you like, I don't know, Tesla sort of plays, then yeah, maybe you like the stock, but I don't see the point in buying Zscaler. It's from every point sell. Their balance sheet is not really that great. I mean, it's not extraordinary. They are growing very fast, sure, but their profits are negligible compared to their market cap. So basically, their valuations are pretty high in the sky. Um, yeah, maybe I'm not sure if you understand the company very well, if you believe that a new product will launch, or I don't know, they have a competitive advantage, a competitive edge, and you think that this will materialize into better earnings than I have predicted, then sure, this is a buy. But if you remain, mm, if you remain with my way of thought, if you remain with the value investor school of investing and of thought, then this is the sell. And as for a buy, I think it would be a buy at somewhere around sub 90, sub 85 levels. Now, thank you for watching. If you want to please like and subscribe for more deep analysis, and also check out my investing blog featuring in-depth analysis from the link in the description below. See you in the next video. Bye.